Let's go to Action Construction Equipment. The company delivered a strong Q1 number with 55% growth in revenues. However, there was some pressure on the margin front. Sorab Agarwal, who is the Executive Director of the company, joins us now to discuss this and the outlook going forward as well. Mr. Agarwal, good afternoon. Thanks a lot for joining us. Well, Q1 has been strong for you, even in terms of revenues, talk about profits. However, there was some compression on margins, understandably so, because we've been talking about higher raw material prices. But there was some weakness that you saw in your construction equipment segment. Can you give us a reason as to why that happened, and what is the revenue growth expected from here on in this particular segment?
In this particular segment, we are very confident that we should be able to attain at least about a 30-35% revenue growth. And the slight weakness was primarily due to the construction equipment market, especially backhoe loader, which is our main product in this segment. So overall, ever since the BS4 norms have come in, and with these high commodity prices, inflation, and cost of machines going up, the market has definitely been a little slow in the last 1.5 years, and that was the case again in the last quarter. So that's the main reason. But I'm sure in this quarter onwards and going forward, we'll pick up and grow as conveyed 30-35%.
You're saying the market for backhoe loaders was slow in the last 1.5 months.
Last 1.5 years they've been slow ever since BS4 has taken. Yeah.
Okay, but now you expect a recovery in it for FY.
Yes.
Okay, and 30 to 35% is the guidance for the construction equipment segment or consolidated revenues?
On a consolidated basis, I think we should be doing at least a 15-20% at company level. And if I talk of different segments, in cranes, it should be around 15 to 20%. Agri, again, 15 to 20%. Construction equipment, like we mentioned, 30-35%. And metal handling may be close to about 20%.
Okay, so those are some good targets that you have in place for FY23, Mr. Agarwal. I wanted to speak to you about your acquisitions. You recently completed 2 acquisitions amounting to around 45 crore rupees. They are done in the lower segments. What is your current market share there? How much revenue contribution comes in from here? And with these acquisitions, what kind of market share are you anticipating?
See, first of all, I'd like to correct, we spent close to about 15 crores in doing this, approximately a little plus minus, these 2 things. And they're in the lower segment, lower end segment of cranes. The unorganized players about 3-4% market, which is between them. So we have taken up 2 of such companies. And, on a consolidated basis, this will add 25-30% to our top line, 25-30 crores to our top line. But definitely it will help us in pricing our products better in these regional markets. So it was more of a regional play. We thought of taking over these lower end cranes.
By how much will it help you improve the pricing?
Yeah, it should definitely help us in managing, pricing in the segment where we were getting dented by the lower end players who were trying to sell at any prices and were struggling, as a matter of fact, in the market. So we have actually relieved a couple of players out of the business, smaller players.
Okay, but what impact could it have on consolidated margins?
See, if I talk of crane segment, eventually 0.5% to 1% definitely should be there on the card. If you put it on a consolidated basis, it will become half of that approximately, or 60% of that. So anywhere between 0.5 to 0.7% going forward.
Okay. Just a follow-up, Mr. Agarwal, you said overall, in terms of an overall revenue growth, you're expecting a growth of around 15 to 20%, right? And you stick to your guidance of 2,500 crores of revenues by FY24?
Yes, in all probability.
And
it can only be faster in this year.
Yes.
We'll have to wait for the balance of the year to pan out, because definitely the momentum which was created in Q4, end of Q3 last year, Q4, which continued well into 1 or 2 months of Q1, that did become a little moderated or slow owing to this extraordinary inflation and things that we saw. And then again, monsoons again, the demand typically goes down a little, and it starts to pick up in August and September. So we're very hopeful. Things seem to be in the right direction.
Okay.
Inflation seems to be coming under control. Commodity prices have definitely to some extent come under control. So doing a 15-20% a little higher than that this year and going forward, attaining 2,500 crores by FY24 seems to be easily doable.
Okay. So what would the export contribution be on that one? Because it did see a quarter-on-quarter decline, the export revenues, that is. It is a very small part of your overall revenues. But in general, what is the outlook for export revenues, export growth? What is going wrong here?
Nothing is going wrong here. We were hardly doing any exports 2 years back. And we have come to a 5-6% level. Yes, last year it got stuck at 4.6%. So hopefully this year we should be at least back at 5-6%, somewhere close to upward of 100 crores, which looks evident. And you should see some result this quarter onwards. And internally we have targeted take exports as a contribution to our revenue to at least about 10 to 15% of our revenue. So if I talk of FY24, we are definitely targeting that 250 crores plus going up to 300 crores.
By when?
That is our target, and we are well on track. And what also gives me confidence in doing this is that the plant which we are now starting to set up for the government of Ghana in this year, and will be set up by end of FY24. So this will add to our export revenues. But especially after FY25 onwards rather, it has a potential to add 200 crores to 400 crores to our top line on account of export of CKDs and components.
Okay, and is it a higher margin segment for you? Do you enjoy better margins in export markets?
Definitely, export
By
markets
how much?
It depends market to market, product to product, but on the whole, I can say about a 5 to 10% better than what we're able to generate in India.
Okay, okay.
Can you tell us a little bit about margins? You gave us a revenue guidance, but what's the picture on margins?
I think this quarter onwards, the margins should start to normalize and we should start to hit double digits. Being a little conservative, I would put that on a whole year basis at EBITDA level, we should be somewhere close to about 10.5%, if not more. And that should be possible.
And what will drive the margin level improvement to 10.5%?
See, primarily the cooling off of commodity prices. So that will definitely help us regain our margin, because in the past we have been at 10.5-11% maybe. So first of all, we'll talk to that, and I'm sure in the second half of this year, some operating leverage will also start to kick in, because generally 55 to 60% of our revenue comes in the second half of every year.
Okay.
So going by that philosophy which we've experienced in the past, I'm sure operating leverage coupled with cooling of commodity prices should enable us do at least a 10.5% on a whole year basis.
So last question before we let you go, the Ghana project that you said, is it similar to the 100 to 160 tons crawler crane project that you're putting up, or is it different from that?
No, this is totally different. This is a project we are setting up for government of Ghana, to be owned by government of Ghana. They will be operating it. We are just setting it up for them, giving the technology and the expertise to do it, and then finally we'll be supplying CKDs and SKDs to this plant for manufacturing.
So this new plant that I'm talking about, the crane plant, when will that be operational by? Have you invested or put in capex completely? What is the revenue potential here? See,
we have started to build this plant already, and hopefully in Q4 this should be productionized with a capex of close to about 40 crores, a little plus minus here and there. Primarily for bigger capacity cranes, because see, in India, pick and carry cranes are most prevalent, cargo cranes are prevalent, and we are market leaders there. About 60-70% market share in different product categories. These bigger cranes are currently India is depending on imports. So we are setting up this bigger facility to make cranes even bigger than 70-80 tons and going up to 160 tons, and eventually maybe 250-300 tons.
Okay.
This will be in place by Q4, and I think the overall revenue capability of this plant would be anywhere between 500 to 600 crores, which is a little fungible, so it can actually go up a little or something else can be done here. So all that is possible.
Mr. Agarwal, we leave it to that. Thank you very much for joining in. That's Action Construction Equipment for you, guiding for a 15 to 20% revenue growth this year. By FY24, their target is revenues will hit 2,500 crore. They're expanding their exports. It's still on a low base, but exports in Ghana is a focus area, and margins too will improve to 10.5%. The stock has gained close to about 5.5% in trade.